So welcome everybody, very welcome to our webinar. This is our 3 steps to, fantastic trading. So our 3-step trading webinar. Now remember guys, this will apply to a lot of different things. And I'm very excited to have you guys here with us. I've been trading for a long time and I've talked with so many darn traders and it's always a pleasure. And I love to get to know everybody. And one of the reasons of this webinar is because I have talked to so many traders and I've seen so many things that people are up to in their normal day-to-day trading. And it brings up this topic of, as I talk to traders and so on, people are kind of lacking a little bit of a process here. And so I wanted to share with you guys my 3 steps, the way that I look at every trade, the way that I can maximize my time and maximize my profit and all of that stuff. We're going to get all down to that, but there's so much to discuss. And I'm super happy to be with you guys today on a lovely Saturday morning webinar. So let's get right down to it. Okay, so again, one of the most important things that we need to discuss here is how to organize your trading, right? We, of course, our number one goal is to make money. But to make money, to do all of that, we have to have a really organized approach. People really, like to just talk about, here's a technique I use, right? And then that's it. And they don't really talk about, the dirty work that has to happen behind the scenes for us to be successful at trading, right? So we're going to talk all about that. We're going to talk about how to maximize your trading and how to do all this. But the best thing that we're going to talk about is how to put in the hard work now so that trading doesn't take you more than just a couple of minutes every day. Now, I like to trade. I like to watch my charts. I'm at my charts quite a bit. But I don't want to have to be at my charts all day, every day. A lot of people have full-time jobs. A lot of people are in time zones where, the exciting movement happens overnight, all of that kind of stuff. So we're going to talk about how to kind of maximize your trading approach with these 3 steps that I use to kind of look at the market. And there's a lot to it, right? But I want to really make sure that we have kind of 3 clear things that are being done every single time we take a trade and every time we do anything. Okay, so before we get to all that, the token family picture. By the way, this picture was taken just a couple of, well, I guess it's been maybe 2 weeks or 3 weeks. So you can tell where I am. It does like to snow. Although that was a pretty snowy day. I'm a intensely obsessed skier. I don't know that I'm so good at it, but I love to be on the slopes whenever possible. And we don't have nearly this amount of snow now, which is sad because I'm ready for winter to get underway. But anyways, this is the family, and this is a lot of what is, the motivating factor here, right? We want to be able to trade so that we don't spend. I mean, if those that are working full time think about it, the thing you do the most every day is, besides sleeping, I guess, and some people don't do much of that. The thing that we do the most every day is work, right? And it takes away from family time, from personal time, from doing our hobbies, from spending time with kids and spouses and grandkids and so on, right? And so if we can organize what we're doing, maximize our time and our process, we get a little bit more of this. And that's always good. I always like that. So again, Jared Johnson here, and I've been trading for darn near 20 years. I'm starting to lose a little bit of track, but it's been right around there. And I've been training and doing consulting on the trading side of things for about half that time, about the last 10 years. So lots of experience, lots of fun things have happened here, and it's all really good stuff. So what I'm curious is, when you approach the charts, does anybody ever feel like their brain does this? Does anybody ever, do you ever feel like you go, Okay, maybe that's just me. Maybe I need to lighten up on the caffeine. I don't know. But do you ever feel like when you get to the charts that there are, or when you think about trading, when you approach trading, that there are just 50 different directions that you could potentially go? That's right. That's right. We really only have two two things to do, right? Is trade the market up or trade the market down. But somehow, and the fact that there are only two things makes it even more frustrating, right? That's what makes trading so frustrating. Is people will tell me, how can I be wrong so much when there's only two things the market can do? It can only go up or it can only go down. And this comes because we lack a clear approach, right? This kind of stuff, this kind of jumbled craziness can hit us pretty hard, and can make it very difficult to determine what we want to do in trading, and can make it very frustrating, and can make it also feel like this is a big rabbit hole, right? How are we ever going to succeed at trading if there's a million options of things to do? And there literally are a million options of things to do. And so, what we need to do is we need to clarify what those things are. We need to clarify what we should be doing and how we should be doing it so that we don't feel this overwhelming, um, what is even going on in this market, right? What is even happening? I don't even know. So keep in mind, guys, I trade. I've traded currencies for nearly 20 years. I trade stock and options as well. Um, and with options, there's even more strategies, right? You can do 50 different things when we're talking options, but specifically on the currency side of things, there's only two things we can do. We can only trade it up or trade it down, right? And that's it. That's it. And so, but it can still feel a little bit jumbled, a little bit crazy, a little bit disorganized. And so, what we want to make sure of is that we have a very clear approach and how we can do this. Um, Yes, yes, Justin. That's a very good. That's a very good comment. As Justin says, our problem is not lack of information; it is too much information. I feel like a great example of that, right? For those of you that have any interest in watching TV, right? I have kids. My days are busy. A little TV. My wife and I lay in bed, watch a show or two at night, kind of wind down. Talk, hang out, that kind of stuff. But have you guys noticed that there's like 10 streaming services now, excluding cable? I mean, I don't even know if people have cable anymore, but but there's like 10 streaming services now, and they all have like just endless amounts of content on them, right? And we're so bombarded with information, and trading is absolutely no different. We are so bombarded with information. So what I want you guys to do, what I want you guys to come away with here is a clear idea on what I do and how you can even copy that and mimic that. Now, a lot of people tell me you should you should do webinars and leave people hanging, right? Give everybody just enough to be interested, and then leave them hanging for the rest so they come back for more. I can't do that. I don't know how to do that. I don't know how to just not spew everything out. So we're going to go into some real in-depth stuff. I haven't done a webinar like this much this year. I do them very regularly. I do webinars, daily and weekly with my trade groups, but I haven't done too many webinars this year for non-group members that where I talk about my strategy and I share this because it's been so busy this year. We've been doing so much. The market's been going so crazy. And so I have a lot to say. And so we'll get through it as quick as we can and be as clear about it as we can. But I want to make sure you guys have a clear approach about what we do. Justin, very good point too. It's difficult to decipher. Difficult to decipher. Now, it's kind of interesting here, right? If we look at our life, we all need to kind of divide things up a little bit, right? There's got to be some time and energy and effort put into health and relationships and business and finance and all these things, right? We need to kind of decipher the details and divide up and decide where we want to put our time and energy in these various aspects of life. For some reason, as traders, we don't think that this is necessary. It's kind of interesting, right? A lot of people say, Yes, I'm a professional trader. I'm professional this, that, or whatever. And so I no longer need help, right? And there is this persona among traders, right? The gurus, right? You guys hear about the gurus that have figured it out and have all the answers, right? Know everything, have all the answers, have it all figured out. I find it very interesting and very entertaining that some of the richest, most successful people in the world, some of the largest business owners and CEOs and so on, um, not only are they way more successful than anybody that probably any of us know, but these people take a lot of time to plan their lives, and they have so much help, right? They even have coaches, and they have personal excuse me, assistance to help them make sure that they are not doing things um, that are completely detached from reality, right? It's like a professional athlete. You take a professional golfer or a professional football, basketball, anybody. These people all have coaches, right? They all have somebody to help them stay on track, because it's easy when you get to a certain point to think, I know it all, I'm on, I've got it all figured out, I've done it all, I've seen it all, and that's it, right? But again, the most successful people have this additional help to continually learn and improve, and as traders we need that more than probably anybody, because we're constantly dealing with a changing market, right? Um, and so it's something that's super important. As a 20-year veteran of trading, I by no means think that I have it all figured out, right? I know people that are more successful than me, that manage larger funds than I do, that have been trading longer than I have, that have different approaches than I do, and we all get together weekly and monthly, and certainly a couple of times a year, to discuss what we're doing, share our ideas, learn from each other constantly. I would never assume that I have all the answers, right? And for some reason, as traders, we think we get to a point, that's it, we know everything, and we're good to go. And it's constantly a learning process. But we've got to divide our trading up into some categories so that we can determine where we need to focus our time and energy and effort, and make sure that we understand and have a clear picture of all of this, right? And so these are often reasons that we fail at trading, right? We don't we don't have a clear plan. It's not even just a plan. You always hear this plan to fail and fail to plan and all that stuff, right? Which I think is totally true. But oftentimes we just don't have a clear plan at all, right? We have a plan. We know what we want to see when we're trading. We know what kind of setups we want to find and that we want to trade, but we really don't have a very clear plan of how we're going to execute that. And that is failure number one right there, is not having a clear picture of what needs to be done. The next tripping point is, if we do have a pretty clear plan of what needs to be done, that plan can get derailed very easily, right? As traders, we're incredibly susceptible to a whole bunch of stuff, right? Our tolerance for failure can be pretty low. Now, there are pros and cons of having low tolerance of failure. We don't want to stick to something that doesn't work, but at the same time, we need to stick to something that isn't going to work 100% of the time, because nothing will, right? And so I see people divert from their trading plans, from their ideas of what they want to accomplish and how they want to accomplish it. You get two or three losing trades in a row, and it's all out the window at that point, right? And so there's going to be some big benefit to having a clear plan, and then being able to stick to that clear plan, right? That's just so important. So those are a few more details. Whoops, there we go. That we need to keep an eye on. And then we've also got to make sure that we've got a good, clear, bigger picture, right? Trading is, I hear people tell me this a lot. And so these are why I bring these things up. But people get frustrated with trading because it's not like a job, right? In trading, you don't You don't clock in at 8 or 9 o'clock in the morning and clock out at 4 or 5 o'clock in the afternoon, and you're done and you're making money no matter what, right? How many people have had a bad day at work where you just thought, my brain is not connecting, I'm having a heck of a time, this stinks, but you still get paid, right? Especially if you have a salary, right? You you'll do some stuff, you might do it kind of half-hearted, you might just be trying your hardest, but it's just not working, right? Your brain's just not connecting with whatever your responsibilities for the day are, but you still get paid. You show up Monday through Friday, you get paid. Trading is absolutely not that at all, right? We might be totally on our game and super clear and super rock solid on what we do, and we show up and we lose money today, right? And we're going, oh my gosh, I was so clear, my plan was so good, I had the bigger picture in mind, everything was great, and I lost money today, right? um, and that might happen multiple days in a row. And so what we have to make sure that we understand is that there is a much bigger picture in play in trading. I have found that probably most of my profits over the couple of decades of trading that I've had have been made in the minority of the time, right? The smaller amount of time, I have made the bigger amount of profits. I'll find a great setup and a great trade, and I'll make an incredible amount on that trade. Now, the trade might run for a little while and I might end up with multiple positions in that trade, but that one trade is going to make me half of my profits for the year. And so that's a very common thing that we need to understand, is that you're not always going to make money trading every day, but if we have a good plan, we understand what it is and we stick to it and we keep that bigger picture in mind, it doesn't matter if we make money every day. We don't have to make money every day because that's not how this market works. I like to call trading pushing of rope, right? It's impossible. You can pull on it, and when the market is giving us something that we can pull on, we take it. But it's certainly not a guaranteed daily kind of situation. So, as we approach the market and we have all these directions we can go, I want to talk about what my directions are that help me the most. And I typically look at three very specific things, which is why we have three arrows. Oh, I love it. The three approaches that we want to discuss in trading and in the market is that number one thing that we talked about, which is having a clear approach, right? This clear approach of what am I really looking for, and keeping that bigger picture in mind, right? Clear approach, so important. Number two, managing risk. I can't say enough about that. We're going to talk a lot about that. And automation. Oh, these are all the beautiful things of trading. And like I said, I want to give you guys something that you can work on and you can practice a couple of minutes every day. And these three things are it, right? Clear approach, managing risk, automation. We've said quite a bit about clear approach, right? Having a path through all of the noise and all of the things that we see. I would say that some of the most common things that I hear from people are, I watched the news and the news told me that the dollar's going to crash because we're printing too much money, blah, 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 right? And I always say, okay. But if you watch the news and you take trades based on the news, then you are going to be the most confused, and that's terrible. By the way, don't ever do that. Don't ever take a trade based on the news. Anything you hear on the news, just stay so far away from it in regards to trading, because I don't even know what they're up to. But likewise, managing risk is so important. You could honestly, if we're talking the currency market here, you could honestly trade any direction in the currency market. And if you had a really good risk management model, you could be profitable with no strategy, right? With no strategy. If you were patient and good on risk, you could make money with just managing your risk well. That's how important risk management is. The one thing that we can control in the market, as we talked about, you can't control what the market's going to do on Monday or on Tuesday. We might be on the wrong side of the market on Monday. We might be on the wrong side on Tuesday. The one thing we can always control is our risk. So that is just so super important. And automation, right? Automation is so important. We're going to talk a lot about this, but we live in an age of a lot of technology. Let's use it. Let's use it. I don't want to, beat myself up working more than I have to. So let's put the computers to work. Okay, but let's get down to the details here of what we need to look at to kind of. I want you guys to help, or I want to help you guys develop a clear approach on trading. How you can look at these markets, look at these charts, and understand what might be at play. What is the bigger picture that is at play? Somebody asked me here, sorry, I can't see your name. It just says user, but you said, can we touch on what happened yesterday with XAU, USD just tanked? How did it get caught in something? How not to get caught, something like this. Yes, we are definitely going to chat about that. What happened with the US dollar and so on, because that falls very much in line with what we're going to be discussing today. Okay, so here is how my approach starts to come to play, right? I use these 4 simple steps. Pretty easy, not too difficult. But when they're used together, this is some of the most important stuff that you will ever combine, right? Everybody knows about patterns, and everybody knows what support and resistance is, and everybody knows what targets and these kinds of basic things are, right? We're all pretty familiar with this. But my guess would be, with at least some of you, that you're putting a lot of time and emphasis on one of these things and maybe not on the other. And I say that because I've been working with traders for a lot of years, and I've seen this happen just over and over and over again, right? Is not having a balanced approach and not using some of the very basics that are available to us. So we're going to talk about how we're going to put all of this stuff together. Again, simple things, patterns, support and resistance, targets, and then a little bit of my special sauce. I use a moving average, a long-term moving average that I love, that really helps me get a very good feel for which direction the market's going. Okay, so let's talk about that. All right, so let's go right into patterns here for a moment. How many people look at chart patterns daily? How many of you would say that you do that? How many look at chart patterns every day when you're determining where the market is headed? Anybody? Give me a show of hands. Show me who looks at chart patterns every day. Every day. Good, Justin. Okay, Fiona, not all patterns. Good, Mel. Good, excellent, excellent. Okay, so patterns are super important. And Fiona, to your point there, that you do look at them, but not all of them, I think that's good. I don't think we need to look at all of them. And actually, I have this one up because these are kind of the most common patterns that I look at, right? Double tops, double bottoms, head and shoulders patterns, rising and falling wedges. I don't know how much more we need besides that, but these are all super important. These are going to be very key in helping us determine where the market's going. Now, how many of you look at a weekly chart in the currency market at least once or more per week? How many of you look at a weekly chart? Weekly chart. Give me a show of hands, guys. How many are looking at weekly charts at least once a week, if not more? Joe, nice to see you, my friend. Good to see you, Joe. Good. All right. Very excellent. So we have a pretty, okay, Fiona. No, I look at 4 hour, 1 hour, 15-minute, never weekly. Okay. So this is where this will be so super important for all those that don't find that you're looking at some of these longer term charts and some of these bigger pictures. This is where we get stuck in trading, right? This is how the market surprises us and does something we never saw happening, is because we're failing to look at the larger, longer term picture. Now, of course, you can say, well, I was looking at the long term picture and then coronavirus happened. Okay, there's going to be black swans out there. There's going to be things that are fairly unexpected that happen. But for the most part, I would say a large majority of the time, if we focus on this stuff, we will be on the right side of the market. Patterns on long-term charts. Patterns on long-term charts, so super important. So we want to talk a little bit about that. Whoops. We want to talk a little bit about these patterns on long-term charts. I want to show you a couple of examples of these kinds of things so that we can see how these work. Again, double tops, head and shoulders, rising, falling wedges, double bottoms, inverse head and shoulders. These are kind of the basics that we want to keep an eye on. So let's look at a couple of things here. If we look at a currency pair, well, I'm just going to take the pound dollar for example. Where do you guys think the pound dollar is headed? Who is trading the pound dollar? Where do you think the pound dollar might be going? Any thoughts? Any ideas? What do you guys think about that? Up, down? Is this a pair that anybody's trading? Because it's not one that I typically trade, but I have this as a great example because I will be trading it because we have a very nice long-term pattern. So, okay, Fiona thinks the pound dollar might be going down. I think it's possible. Market could do anything. Look at the pound dollar from the weekly chart. What do we have on the pound dollar on the weekly chart? We have a massive inverse head and shoulders pattern, right? Now, I know everyone's going to be thinking, well, guess what? The UK and Brexit is this big mess, right? Brexit is stalling again. It's going to be a mess. It's going to do all of this stuff. And so Brexit's going to be a big problem. Now, I did not trade when Brexit was being voted on. I stayed out of the pound dollar, right? I stayed out of all pound pairs because I thought this is going to be crazy and this is a known news announcement, and I don't want to, no matter what the pattern is, I'm going to be careful because when we come to votes and those kinds of things, markets can get a little bit tricky. But overall, the technicals seem to usually win. So when we look at the pound dollar here and we say, okay, Brexit's come to another standstill and so on, don't even care. That will probably slow the movement and make it choppier and messier, and that might be a reason we want to stay out of it, right? But if I look at the chart here, I don't have too terribly much doubt that the pound dollar is going to, in the near future, go higher, right? Because when we look at these kinds of patterns here, like a big inverse head and shoulders pattern on a weekly chart, I like to kind of draw these rounded bottoms in here, right? When we look at that kind of stuff, that gives us a very clear picture, right? Now we can say, okay, I'm looking at this big inverse head and shoulders pattern, and here's my neckline. The neckline on the pound dollar right now is right around 134.50. You could maybe say 135.00 to be safe, and then from there, our next kind of stopping points is almost 145.00. We got at least 800 pips to go from this area to our next major resistance zone. Now, the pound dollar has been in a massive downtrend. Brexit was a big mess. That's Brexit right there. We had a little bit of a downtrend underway, but it's been in this big downward movement here, right? And now we get a really long-term pattern that is bullish. And so we know that we probably want to be long pound dollar above here, right? Above this neckline, and we probably have 800 to 1,000 pips that this thing will run up. And we get that from simply looking at approach number one, right? Which is patterns. Patterns. And I want to look at patterns on long-term charts whenever possible. Patterns on long-term charts are so super crucial, so super important. We actually have a trade on this guy right here. Well, maybe I'll come back down. But Aussie Swiss, long-term chart. What do we have right here? Same thing, right? We're kind of ending up with another head and shoulders pattern, right? So we want to look at this kind of stuff and say, what is this long-term chart showing me? What am I to get from this long-term chart? And that is a clear long-term pattern. Long-term charts will always give us a very clear picture of where things are going to go. It doesn't mean that we have to stay in the trade for 800 pips or 1,000 pips, which is obviously awesome, and I don't think anybody would complain about that. And it doesn't mean that that it has to be a super long-term trade. It means this is the direction we need to be trading This is the bias we need to be looking at, right? We need to be on a bullish bias with the pound dollar. That's it. Now, it hasn't confirmed yet. We don't have confirmation. And so confirmation is going to be key, right? We need to learn how to read these patterns so that we can learn what confirmation is. So when you see like a long-term head and shoulders pattern right here, right? Confirmation is the entry above the neckline. If we're talking a bearish head and shoulders pattern, confirmation would be an entry below the neckline, which is that red line right there. Everybody good on that so far? If you're a stock trader, guess what? We have this happening all over the stock market as well. If you're a stock trader, look at our good friends, the ketchup maker folks. I've actually been trading this stock quite a bit. And look what we have here, right? The guys that make ketchup. So we don't have a confirmed head and shoulders pattern yet, but when it starts to break that neckline, we do. And away we go, right? We want to watch this stuff. Who's been watching some of the airline stocks? These guys have been going nuts, right? So when you start to see these rounded bottoming patterns, these neckline breaks, this kind of stuff, that's a long-term pattern, and we need to follow that direction. Who is surprised? Everyone's saying, oh, the airlines are dead and so on. Doesn't matter. Look at that pattern. It's playing out. That's the kind of stuff that we want to look for. So we stay on the market, on the right side of the market, by understanding the long-term picture. And I look at these patterns once again from, if there's nothing clear happening on the weekly chart, then I go down to the daily chart. But the weekly chart is almost always going to give us a clear picture of what's happening here. Now, it doesn't mean we have to trade from the weekly chart or from the daily chart. We can trade from a 1-hour chart or a 15-minute chart or whatever, but we need to know what the big picture is, and we're going to get that from these long-term charts. Again, mark my words, pound dollar, I'm going to be trading this thing higher. Pound dollar, that is going to go hopefully to the moon. So we want to look for that kind of stuff and have a clear picture on patterns. The next thing I look at is support and resistance, right? We're going to talk about these simple concepts that are so powerful when they're put together. I'm not a chemist. Do we have any chemistry people here? I'm sure that there are tons and tons of compounds or elements or whatever that if you mix one simple harmless thing with one other simple harmless thing, it probably catches on fire or explodes or something, right? And trading is the absolute same thing. We can take something on its own. You know, patterns, chart patterns on their own are okay. Support and resistance on its own is okay. And I've done all these things on their own. I've lost a lot of money figuring out that these elements on their own are not strong enough to be a trading strategy. But when combined together, the right amount together, then we have a very, very clear picture of what can happen, and we can follow the market along quite easily. Okay, support and resistance, right? I'm looking for long-term highs and lows, and I'm looking for short-term highs and lows, right? I want to see, I want to see a long-term high or low that goes back 3 to 5 years, and then I want to see short-term highs and lows that go back a couple of days or a few weeks or even 6 months, right? Those are kind of short-term levels for me. Longer-term levels are kind of yearly and up. Short-term levels are more kind of multi-month, multi-week, multi-day levels. And our question's always going to be with these long-term levels. Will this cause a major reversal? Or on the other side, is this going to be a major breakout? Short-term levels, more common for a short-term level to break out and continue than to cause a major reversal, right? Long-term levels are more common for reversals. Short-term levels are more common for breakouts and continuations. What's a long-term support or resistance level? Fiona, you were asking about XAU USD, but why don't we just look at the USD side of it? This is a long-term USD level. Here's one of the reasons I think we could see a little bit of that pound dollar going up, because look at this long-term level on the dollar index, right? Coronavirus craziness spiked the dollar up, but it just hit this high of 2016, and we hit it again in early 2020. This is a long-term resistance level, and this is actually a pattern, right? We go back to our patterns here, and we look at these guys right here. This is a long-term double top, long-term double top. Dollar index has a long-term double top right here, and this resistance goes back all the way. I don't know how far back it goes. There we go. All the way back to 2002. Oh, sorry. All the way back, yeah, 2002. But lots of reaction around this area, right? Support breaks through, resistance, resistance. This is a massive level. Likewise, this can be a massive long-term reversal when that's ready to happen as well. But for the meantime, when we're hitting this kind of big double top right here and this big long-term resistance level, that will be the predominant pattern that tells us the trend, right? So when we're looking at the dollar, we're saying, why is the dollar weakening? That's why the dollar's weakening, right? This is exactly why the dollar's weakening, because we've had a big run up to resistance, a big pullback, another run up to that same resistance. It's pullback time, right? It's time for this to, in the long term, of course, we're looking at big charts and big pictures here, but support, and resistance and patterns kind of put together. Sometimes they can be a little bit of the same thing. This is a huge resistance level, and this is also a pattern right here as well. It's a double top. But I look at that and that tells me this is the direction things are going, right? This is the direction things are going. So now when I have these long-term levels and these long-term details in mind, I can say, okay, well, this might be ready for a big move. When I'm looking at more short-term support levels, right? Short-term highs and lows, will this cause a breakout and a continuation? We have a really long-term level on the dollar index up here. This is 3 and 4 years apart from hitting. And then we have a shorter term level that we can look at on maybe a 4-hour chart, right? And we say, well, this hit all the way down here, bounced all the way back up, and it's back down there again. Well, anything below probably 91, 60, 70 area is going to be a continuation. That's going to be a breakout, and that's us following the flow of the trend, right? We have a long-term big picture in mind, in play here. And then we have some shorter term levels. This is only, this is a little bit apart, a couple of months apart here, still a bit of a bigger level. But that could be our breakout zone. That could be the spot where the dollar index breaks and makes its big continuation move down. So understanding those, seeing those levels, knowing those levels, we're going to start to be able to stay on the right side of the bigger picture. So long-term highs and lows and short-term highs and lows are going to be super important. And that goes with that long-term pattern, long-term support and resistance levels to get the short-term picture, the near-term picture, and so on. Now, okay, there we go. I think that was my VPS. Can everyone still hear me okay? Are we still good on audio and video? Make sure my internet didn't take a dive on me. Audio, video coming through good for everybody? Okay, good. Just want to make sure. I think my my VPS is taking a little bit of a siesta. Happens to the best of them. Okay, very good. All right. Does anybody have any questions or comments so far? Everybody feeling good about everything? Okay. Thanks, Fiona. Thanks. I'm trying to make it nice and crystal clear. Make sure everyone can get something good out of this that you can take with you and use on your trading from here on out. Okay, questions, comments, don't hesitate to interrupt, just jump in and let me know. Okay, let's get to the next. So we've talked about time frames, right? Looking at the bigger picture, pattern, support, and resistance. Super easy. Hopefully everyone's good with all that. And that's all making sense. So let's get down to the next thing. Again, don't be too confused on this. This takes a little bit of practice. But part of how I use targets and pivot points, many of you have heard of pivot points. Every chart comes with pivot points as just a free indicator. This is an indicator that's been around for 100 years, and it's on every chart, and it's free, and it's included, and it's all that stuff. But oftentimes, pivot points are not looked at in the right way, right? They're not looked at and traded correctly. So pivot points help me to understand a trending and an overextended market, right? When something is trending and making a nice little run, and when something has become overextended, right? Pivot points are super crucial to help us determine that. And market imbalances, right? Market imbalances are kind of my own special sauce. That's something that I use on my own. And of course, I teach to my group, and we use it very, very regularly in all of our daily trading activities. But these are two super important things, right? Because once we have, again, this is a four-legged kind of stool that we're talking about here, right? With these patterns and with these support and resistance and targets, and then when we're going to talk about the long-term moving average, that's going to be a good little part too. But these help the table stand up, right? Let's just think of a table with four legs. If you take one of those legs away, it'll be wobbly. As long as you're putting weight on it, it might be okay, right? But any weight, any pressure, the table's going to fall over. And so that's how this trading approach is. Even two of these things on their own are very good, but they're so much better as a whole and putting all these guys together. Okay, let's look at pivot points for just a moment, and I'll just tell you, I have this little description in here. People always say, what's a pivot point and so on. It is the high plus the low plus the close of a previous period. If we're looking at a daily pivot point, the indicator is looking at the high and the low and the close of yesterday. If we're looking at a weekly pivot, it's the high, low, and close of last week. So we take those numbers of that previous period, add them all together, and divide it by 3, and that gives us our pivot point. So if you look at something like, say, well, here's a good example of something. So here are pivot points, right? That blue line is a daily pivot point, the green line is a weekly pivot point, and this big purple line right here is a monthly pivot point. So these pivots are created, again, by looking at a previous period. So this pivot point right here, this weekly pivot, was looking at the high, low, and close of the previous week, and it's just giving us this level. Now, what does that mean? What is that good for? Why do we care about pivot points? Because as pivot points stack up, markets get overextended, right? So as we get a lot of pivot points lining up, this is a big sign that the market is getting overextended. So if we look at something like this New Zealand CAD, let's go to a little bit of a larger time frame here. We've got a pivot point and a pivot point. These circles are pivot points, right? And so they're starting to stack up. We're starting to get a look that there are stacking up indicators down below. So I'm starting to see, there's multiple pivot points there, multiple pivot points here. These are giving me early signs that the market is getting overextended, right? As these begin to happen, these are signs that there's trend, right? Hey, we left a pivot point there that wasn't touched, right? And to kind of be clear on that, that pivot point has not been touched. This pivot point right here, this green one, the market hit that. We don't care about that. We're not watching that anymore. This has not been touched. We care about that a lot. We're watching that very closely. That pivot point's been touched, has been missed. This weekly pivot point over here has been missed. This daily pivot point has been missed. And so those are the kinds of things that we want to start to watch is the market creating a pivot point and then not touching it. And that's an early sign of a strong trend. But the longer these go and the more pivot points we get on one side or the other, the more likely that trend is to be coming to an end, to be getting overextended, to be getting overcooked, right? And ready for reversal. And so it's easy to be blindsided by something like this and say, okay, wow, what a great trend. I'm going to buy New Zealand CAD right here. And I'm going to trade it up because this thing has been going, it's been going up like crazy. This is a great time to get in up. Well, we could look at it like that and say, yeah, maybe it is. And maybe this thing continues on a little bit further. But when we start to look at these guys down here and these guys down here, we say, oh my gosh, okay, this is actually getting a little overextended and this might not be able to go too much higher. This might be ready for much more of a movement like this, right? And we determine that by looking at long-term patterns, support and resistance, targets, right? And here we have a lot of targets down below that are telling us, hey, this thing's getting a little bit cooked. This is getting a little overextended. It might be ready to start coming back down. So that's what a pivot point will tell us. Now, a market imbalance is very much the same, right? I talk about, pivot points. Basically, again, we're looking for a stack of pivot points either above or below. If we have a whole bunch of pivot points up above, we're going to look for good support to hold the market from going lower and a bullish pattern. and then we're going to trade up towards those targets. If we have a lot of missed targets down below, we're going to be looking for a bearish pattern, and we're going to be looking for resistance that can stop the market from going higher so we can trade towards those targets. Is everybody clear on that so far? Does that make sense to everybody? How do you guys feel about that little concept? It's good. It's decent. It's making sense. Any questions? Any questions so far? Is that something that you guys are digesting? Does this give you something you can work with here? Everyone feeling good about that? Bill, how's that coming through? Charles, everything good there? Colin, nice to see you, Colin. Dan, you feeling good about that? Don, Devinder, Eric, Gary, Glenn, nice to see you all. Is everybody feeling good? Joe, Mr. Marsh, that all seeming all right to everyone? Good, 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 good. Johnny, my man, good. All right, so that is that's what we want to keep an eye on. Now, market imbalances, these don't always make a ton of sense. They're easy concepts, but they're kind of weird to look at. They don't always make a ton of sense at first glance. But market imbalances are these, right? Since we're over here on New Zealand CAD, this is a good currency pair to look at market imbalances. A market imbalance is exactly something like this that you see right here. We have a pretty aggressive breakout right there, and we have some consolidation. So the consolidation prior to the breakout, here's our consolidation right here, and then this thing breaks out and runs. This creates a market imbalance for us, right? And a market imbalance is where you get that consolidation and a breakout and the market doesn't come back to it. Oops. And so you can see that this happened over here, right? We had a big breakout. Oftentimes these can be great entry points, right? Because we'll see the market kind of break out, pull back, retest that level, and then take off. And those are great entry points for that. But when we see that the market breaks out and doesn't come back and retest, we go, that might be a little bit of an early sign that this is getting, you know, that this will be a good target to trade back to. We just need some of the other confirmation to get there. Now, what happens when we get that happening a couple of times, right? Well, do we have that? I think we do, right? Again, if we go back over here, consolidation, aggressive breakout with no pullback, right? Consolidation right there, big breakout, no pullback. And away we go. So now we have kind of two big market imbalances right here that are telling us, hey, we could have pulled back to that and you know, and a weekly pivot, of course, in there. Didn't pull back, happened again, didn't pull back. So that starts to tell us, hey, the market wants to come back to these levels, right? So now we need to make sure that we're coming up against some major resistance levels, that we've got some patterns that are confirming this, because now we already have all the targets and multiple market imbalances down below. The market wants to get back down to this stuff, but we got to make sure that the other parts are in place, right? That we have some sort of pattern and that we have some sort of resistance level to stop the market from going higher and push it back down to these levels. Everybody good on that? Again, market imbalances, if I had to write it out, it is simply this right here. Market imbalance is consolidation left of the breakout, right? That's all it is. It's just consolidation left of the breakout. There's a breakout, there's consolidation. Mark that high. If it's a breakout down, mark that low and watch that level. Watch how often these levels get revisited over and over again. Here's a good little market imbalance, and this is what I was talking about with kind of some of that trading in the direction, or sorry, taking an entry from the market imbalance and trading with the trend there. There's a little market imbalance. Consolidation breaks out, and what happens? It pulls back and then continues going higher, right? So these market imbalances are super, super crucial, and especially when they are created and then they're not hit. The market doesn't pull back to those. So now we have a pretty clear idea on multiple pivot points and market imbalances. This shows us a trending, strong, moving market that is speedily approaching overbought or oversold. Thanks, Sharon. Nice to see you. And so we want to make sure that we're watching these kinds of things and we're starting to put together the pieces of the puzzle here. Okay, now let's go to something like this. Now we've talked about patterns, support and resistance, targets, the pivot points and market imbalances, and we're starting to kind of put together this 4-step approach of just how we look at the market. I use a 200 moving average. Now, 200 moving averages are very good. While we're on New Zealand CAD, this seems to have all the examples that we need. This red line is a 200 moving average right here. And what this tells us is on this red line, this tells us that we have kind of a shorter term uptrend. We're seeing that we're nicely above this 200 moving average on the hourly chart. We're above it, we'll be above it pretty much everywhere, but you can see a nice little trend there, right? I have done an endless amount of research on testing and times and all these kinds of details, and I found that this 200 moving average is a very, very good indicator of overextended markets. A lot of people use MACD or RSI or stochastics or any of those guys to try to find, hey, when's something getting overbought or oversold? But then you see these, these indicators will stay overbought or oversold for long periods of time. Well, I use 200 moving averages to help me determine when something's overbought or oversold. And if I look and I say, okay, the longer time I have between, from touch to touch, this is the last time that this touched on the hourly chart, the 200 moving average, and it hasn't touched since. So the last time was right around, the first week of November. So it's gone a couple of weeks without touching that moving average. And right now we have a pretty big space in there, right? There's a pretty good little space between the moving average and price. So I look for things like, when was the last time the moving average, MA is moving average, when was the last time the moving average was touched? And how far is current price from the moving average? So I look at this kind of detail right here, how long it's been, and I look at how far away it is, right? And that starts to tell me with a whole bunch of crazy amount of accuracy how overextended the market is, how much trend might be left, and how much reversal might be coming. One thing that I like to look at is, I've done a lot of, like I said, back testing on these numbers, right? How far, how many pips, how many candlesticks since the last time it touched, or how many days or weeks or hours or whatever. And every time frame can vary just a little bit, but we can standardize 5-minute charts, 15-minute charts, 30-minute charts, hourly charts, and so on with these kinds of numbers. And again, I've looked at the distance as well. So when we're looking for extreme numbers, we've seen something go for weeks without touching the moving average. We know it's time to start looking for reversal. But when we see something that hasn't touched for a week or two, these can be great signs of continuing trend. And again, there's much more specifics on that, but I don't want to get into that too terribly much because that's another hour of webinar, and I'm trying to keep this relatively short here. So when something is when something's around the halfway mark of some of these extreme numbers we look for, great sign to continue with the trend. When we start getting weeks and weeks into has not touched the moving average, we're looking for reversals. The more distance from current price to the 200 moving average, the better. The more likely that reversal is going to be aggressive. So we want to look at that kind of stuff because that's going to be kind of the nail in the coffin of how do we actually take this entry? How and where and when do we actually get this entry, right? The longer it goes without touching the moving average and the further away it is, the more likely the reversal will be. And that happens on long-term charts. It happens on short-term charts. It happens kind of everywhere. So that can kind of be the final piece of our entry. Now, how does everybody feel about that so far? We have discussed, there's my stuff right there. We have discussed patterns, support and resistance, targets, and a long-term exponential moving average, EMA or MA, to start to determine where the market's going to go and how we want to trade it. How does everybody feel about that? Does anybody have any questions? Is that clear? Does that make sense? Is there anything you want to say in regards to that stuff? John, it's a good question. It's a very good question. I'll tell you how you can get a lot more of this. Good, good, Fiona. Excellent. Very, very good. Okay. All right. So now remember, guys, this is going back to we got to have a clear approach. Now, managing risk, we're going to talk about that for just a moment. And then we're going to talk about automation, right? But I want to, thanks, Ryan. Good. Glad that was helpful. Fiona, the 200 is an exponential moving average. And do a little Googling to find out what the difference is between EMA and SMA. One is more responsive, is probably the easiest answer. An exponential moving average will follow the market a little more aggressively. And that's why we use it. So we have this kind of stuff right here, right? And we say, okay, we've got a clear approach. Managing risk. Here's the only thing I need to say about managing risk. The smaller your trade size and the more room you give the market, the more your trades will win. Reduce your trade size. I don't even need a slide for this. Reduce your trade size. Trade smaller, give the market more room. That is the most important thing. Again, I incorporate a methodology of risk management where I scale and I stack, right? Scaling into a position means you're adding small positions in drawdown. Stacking means you're adding positions in profit. I do both of those. I think it is so very important to be able to find the biggest moves in the market. If we want to get the big moves in the market, the long-term big runs, scaling and stacking is so important. It's also fine to do on 5-minute charts and 1-minute charts and so on. Spread your risk out. Give the market room. This idea that we can get into a trade with a 15 or 20 pip stop. Somebody told me, they said, wow, I got into a trade that you had that had like a 35 or 40 pip stop on it. And I said, I know, I don't like to go that small on my stop losses, but this was a special kind of an entry and so on. He goes, no, that was huge. I trade with a 10 pip stop. This idea that we can dial the market in within 10 or 15 pips of a perfect entry is insanity. It's just craziness. We've got to give the market as much room to wiggle as possible. And we need to break, if your normal trade size is $10 a pip or $5 a pip or $1 a pip or whatever, break it up into 3 parts, right? Split up that overall trade size so that you can spread your risk out, because that's the thing that will keep us out of trouble. Managing risk, keeping your trade sizes manageable, being able to withstand drawdown, and it's just, that's the key to trading. Managing risk is the key to trading. Okay, so there will be a lot more about that. And I'll probably have just a risk management webinar coming up at some point in the near future, because that's a webinar on its own. But I think you guys get the point, right? Keep your trade sizes small, have multiple entries, and spread that risk across, the market. Okay, I want to spend a little bit of time talking about automation, right? And that's why I have this guy right here. Excuse me, guys, I got something crazy in my throat. Oh, good grief. I think I've been talking too much this morning. Automation. Now, I like this picture because I have been very caveman-y about automation. I don't know if I've been caveman-y, but I've stayed in the past for a while. I've done a lot with automation over the years, and I've had some bad experiences, and I thought, I'm not going to, that's not good, right? And I hear a lot of people say that, oh, the market, I have this automated program and it is, it's doing a whole bunch of stuff without me, and I don't know what's going on, and I don't know how to manage it. I'm just gonna forget it. Automation's too difficult. Having automated trading is just too complicated. And it's because most of the time, it's because people want a one size fits all. I don't want to have to think about what currency pair I'm putting this automated trading program on. I don't want to think about what it's going to do. I just want it to go find trades for me, right? Just go find trades. That's kind of like sending a 2-year-old into a toy store and saying, go get the vitamins, right? It's going to be all over the place, right? And that's what happens with these automated programs, is people just want a one size fits all. And super sadly, there is no such thing. It doesn't exist. If you found one, I'd love to see it work in the long term, right? Because what we need to do is we need to have a clear approach for our trading. We need to understand patterns. We need to understand targets and support and resistance and this moving average concept and principle I've talked about. And we need to apply that to our automated trading as well. We cannot put an automated trading program on a currency pair and just say, good luck, make me some money. I'm going to go play golf, right? We have to do the dirty work. We have to do the hard work, which is determine which currency pairs and what direction we want them to trade. And then an automated program can do very, very well for us if we have a clear approach on what we should be doing in the first place, right? So, that's what these automated programs. That's how these automated programs should work. Yes, Johnny. Yep, we're talking about EAs, expert advisors, which is what we call these automated trading programs on MetaTrader. EAs, robots, expert advisors, all that stuff, right? We do the hard work. We analyze the charts. We determine where something should trade, and then we let the robot handle the rest. So I use a robot, and it's pretty cool. I like it. I don't know why my VPS took a dive on me, but it decided to. I use a robot on, once I have determined that there is something that I want to trade, a lot of movement happens overnight, right? Happens overnight for me. I'm in the US, I'm in the Western United States to top it all off, which means that European markets, UK and European markets move pretty well, but they also move pretty well at 1 o'clock in the morning. At my ripe old age, 1 o'clock in the morning is dreamland for me. So I'm not even close to being awake. So what can I do? I can make my approach very clear. I can follow the markets and the patterns and the long-term pictures, and then I can put my automated trading program, my robot, onto a currency pair. Right now, to be clear, I'm not all about automated trading. I'm not all about robots and all that stuff. It's part of my approach, right? This is part of the kind of three-prong approach that we do here, which is knowing what we're doing, managing our risk, and then using this automation when necessary, appropriate, when it's the right time, right? I would say that probably 30% of my trades are automated trades. 70% are manual. And it depends. Sometimes, depending on what the market's giving me, sometimes 50% are manual and 50% are automated. It just depends on what the market is giving us. Here's how my program works. It follows trends. It uses moving averages, but it does what I would do if I were at the charts watching it, right? I don't just put this on here and say, work the magic. I say, here's something that I would trade, and if this gives me the setup, which might happen overnight, it might happen, late at night, early in the morning, something at some point where I may not be in my charts, I don't need to worry about missing a trade. I can put this on, I can let it do its work, and I can move on. Here's a little example. I've actually been running the pound Swiss on the robot on the pound Swiss. This isn't a pair I actually normally trade, but weirdly enough, I like what the pound Swiss is doing. And so I thought, I'm going to put the robot on here and I'm going to see how it does. Here's just a little example, right, of what the robot has done on a very much non-trending pair. This automated trading program is meant for trending markets, and I'm actually anticipating a trend. And so I want it to be on this market that I'm anticipating this trend to happen. And here is what it has done in the last in the last couple of weeks, basically this month, right, where I'm waiting for this trend to happen, and it just hasn't quite happened yet. It made this is trading $1 a pip. It made 134 bucks, right? So it's basically made a little over 100 pips in the last couple of weeks of no trend. But when things do start to trend, these can do so much better, right? But this is something, there is some money that I would have not had otherwise, right? That's trading at $1 a pip. You put this at $10 a pip, right? What's this doing? 1,300 bucks, $1,300 I would not have had. You put it at, 20, 50, $100 a pip. There's hundreds and thousands of dollars even that I would not have had otherwise, because this is a lot of trading that's happening overnight that I would not have picked up. Another one that I'm running it on, I've been running the robot on the 5-minute chart. And the robot, again, it takes the entries, it manages entries, exits, it does everything for me. I just need to determine where I want to run it, because I need to know what the market's doing. I can't just put this on anything. I need to know what the market's doing. But I've also been running this on New Zealand yen, and there's been some trend, some sideways choppy consolidation. New Zealand yen trading $1 a pip. It's made $331 in the last couple of weeks, just trading $1 a pip. Now again, you put this, you increase that trade size to $2 a pip. Now we're talking $600 or $700 in the last couple of weeks. You put it at $3 a pip. It's made almost $1,000 in the last couple of weeks. And literally 90% of these entries have happened in the middle of the night. In the middle of the night, when I would have missed them and I would have been sleeping and I would not have had a clear place to put a pending order on. So this is such an important part of the approach, right? We have to take the market from every angle, because if we don't, then what we're going to end up doing is we're going to end up either working too hard and getting less results, or just getting totally frustrated and giving up, right? And so we need to have an approach that we're clear about, and we need to have technology working for us. We need to have all these things kind of put together. So this automated trading robot, which again takes the entries, takes the exits, puts profit targets in there, it even has a trailing stop built into it. These are so crucial. And look what this robot did, right? It made $795. It lost $464, right? And it still came out $331 at about $1 a pip. It's pretty awesome. It's pretty awesome. And that's money that we would not have made otherwise. That's money we would have missed out on. This is $1 a pip, guys, $1 a pip. So this is how the approach needs to be, right? We need to be very clear on how to put together patterns, targets, support and resistance, moving averages. We need to decide, are we trading with the trend or are we trading against the trend? Big, very, very important question. And then we go down to our final approach of, is this a manual trade or is this an automated trade, right? This is more of a short-term situation. Maybe there's, trading with the trend is surprisingly difficult. It's surprisingly difficult, which is why I made a software program to do it for me, because I'm not that great at taking trending entries. I can catch a few of them, but a lot of them happen in the middle of the night, and I don't like to put a pending order on and hope things go well while I'm sleeping. I love to have a robot that has very, very specific criteria to catch trends while I'm sleeping. So this is how I approach the market. This is kind of the 3-step approach, right? Be very clear, very, very clear on everything. Of course, we're going to manage our risk. We're going to decide, which direction this market's going, and then we're going to use automation as well as manual trades to maximize our profits. How does everybody feel about that? Does anybody have any burning questions, thoughts, comments? How does everybody feel? What does that seem? Tell me your thoughts. Tell me what's going on there. Everybody feeling good about that? Does that make sense? Because what I want to talk to you about, lastly, is how you can take advantage of all of this. Okay, so I've shared with you guys my approach. Like I said, I don't like to. I'm not a cliffhanger kind of person. I want to give you guys something you can walk away with, you can use. Whether you do something with me or not, I want to give you something that you can use that can make you a better trader and help you understand the markets better. But if the ingredients aren't enough to make the masterpiece yet, then that is where we have some details. I have a live trading group that we focus on this 15 minutes a day strategy. In fact, my website is dtfx.co/15 minutes daily. So on this kind of situation right here, this is where we do everything that I've just talked to you about, but we do it over and over and over again daily we reinforce these concepts of risk management, of trend and counter trend, of automation, of targets and support and resistance and patterns and everything. It's a huge deal. Oftentimes people need a little bit of repetition because that's super helpful to cement these ideas and these thoughts with us so that we can, really make this our own strategy and personalize it to ourselves as well. What I do in this trade group is we do monthly webinars where we talk about analysis, instruction, learning, and so on. Now I say 12 plus monthly webinars because we do a webinar about every month where we talk about the strategy, and there's tons and tons of archived webinars. So there's a lot of material already. And in these webinars, we talk about how to continue to improve. We'll spend a whole entire webinar on targets, a whole entire webinar on the 200 moving average, a whole entire webinar on patterns. Super, super, important stuff, and it's great learning and educational material. And along with that, we will do robot webinars, how to use the robot better, how to use this automated trading program better, right? What we're doing, what we're learning, because again, none of this is a final destination. This is all, what do we know now and how can we make it better? And so constantly meeting together with the group and sharing what the automated trading programs are doing, what our own strategy is doing, what our own understanding of the market is a very important situation. So we do these webinars every monthly and so on. Big deal right there. Along with that, I give everybody daily trade recommendations. Right? In this group, I tell everybody every day, here's exactly where to buy, here's exactly where to sell, here's exactly why we're trading this, including I give the recommendations of where to put the robot on. Oftentimes we'll close robot trades early because of something I see in the market, and I say, maybe let's just take our profit. We're going into a quiet time of day. It's 50-50 here. And so we take specific entries together and exits together on the manual side of things, and we talk about where the robot should be running and how it should be running, and I give my very specific parameters that I have the robot running on. That's a huge deal. Every single day I'm updating and giving new trade recommendations and updating on our current trade recommendations and so on. This is really, really good. On top of that, to be part of the trade group, what you get is a one-on-one session with me, right? And this is a one-on-one session to make sure that you understand the strategy, how it works, and how you can make it work the best for you. I love to do group settings, but I understand that people sometimes need a little bit of one-on-one help. So we'll do one-on-one session for every new member of the group to just make sure that you start the whole group on the right leg. So that's super, super important. On top of that, I actually sell this software, good grief. This robot here, I actually sell it. It's $150, and that is just on its own. That does not come with trade recommendations. That's just the software. So obviously, with the trade recommendations in the group, I will include. This is our Black Friday special here. I include the robot with that, and so that comes with the software itself as well as the trade recommendations that go with the robot, with the automated trading program. And then I have a super cool little software program called the Forex Scanner, and that's what helps me identify those bar counts that we just looked at on the New Zealand CAD. It helps me identify these guys right here very quickly and very easily across multiple pairs. I can look at that software and it will show me this whole 200 moving average distance and time. Shows me everything in one single glance. I can look at 25 or 30 pairs in 30 seconds, and it will tell me anything that is very extended that might be coming to the end of a trend. That is a super cool program as well. That's super, super important to finding these entries. So that is also included. So I don't include that typically with the group, and I certainly don't include the robot with the group. But in the spirit of Black Friday, in the spirit of Cyber Monday coming up on us, I wanted to give you guys something that was something that would make you feel like you're getting a really good deal, because you're getting a beyond good deal with all of this stuff put together. This is all part of an annual membership, right? These 12 live monthly webinars, daily trade recommendations, our trading software, both versions of it, and a one-on-one session is around a $2,650 value. And that is for an entire year. That's 12 months of trading. That's 12 months of instruction. That's 12 months of robot recommendations and manual trade alert recommendations and a live trade group and 24/7 chat and access to me and so on. There's so much that can be done there. And that's a $2,650 value. For our Black Friday, Cyber Monday deal, you can get started with us for one entire year for $697. That gives you everything that we just talked about: the live group, the software, the one-on-one session, the daily trade recommendations, $697. I don't know what the math is, but I feel like that's $14 or $15 a week. Is anybody spending less than that at Starbucks? I'd be pretty curious. So it's only annual. I only do an annual membership. I don't do a monthly membership. A lot of people ask about that. I only do annual memberships, and I've only taken new members to this trade group. We've done it one time this year. So this is a very, very uncommon thing to allow people into the trade group. But like I said, I wanted to give you guys a concept, and I wanted to give you some material to work with, and then give you some good follow-up to be able to understand how this strategy can be implemented over a one-year period. The website, again, is this guy right here. This will tell you a little bit about what we do. You can even watch this short little video right here. And again, we have just a couple of days. I'm going to leave this open and available to be signed up with over the next, over this weekend. So we'll have till Monday to get signed up in here. Here is the link. And there you go. Let's see, questions, comments. Do we need a code to get in? No code needed. I will just, like I said, I'll leave the website. You'll be able to sign up this weekend only. And there will be no code necessary for this weekend. And okay, good. John, is this all included in the premium group? So I do have two trade groups. My premium group has a heavy stock and option focus on it. This group is very specifically one currency strategy, the approach that we talked about, and it's a trending approach or a counter trend approach, and then the robot. It's a very specific currency trading group. My premium group does this plus trade stock and options, but that will, I'll be doing a webinar in the premium group in the near future. But if you have any questions between the two of them, you can let me know. You can send me a message and I'll be happy to chat. But this week only, guys, this weekend only, you have a chance to get all of these things on, like I said, include the trading software, one-on-one sessions, and access to the group. And it is pretty excellent stuff. John, send me a message, and guys, if you have any questions, you can email me at jared@daytradersfx.com, or you can email support@daytradersfx.com as well. My assistant gets to all that. I try not to make her work too much on the weekend, but yes. So very good. Just send me a message and I'll be happy to answer any questions that you might have. Ask me any questions you have right now. John, with questions between the two groups, yeah, just send me a quick email and I'll be happy to chat, and we'll get that all cleared up. Okay, guys, that's all for me now. Like I said, over the next 2 days, today and tomorrow, you can access this trade group and get this deal for this price. Today is Saturday, tomorrow's Sunday. It will be unavailable again on Monday. So you have today and tomorrow. Think about it. We'd love to have you in the group. I'd love to help you understand this strategy a little bit better and help you to incorporate this into your trading so that you can be on the right side of some of these big moves. I look forward to having you guys with us in the group. Thanks for attending us. Yes, there will be the webinar was recorded. Yes, absolutely. Thanks, everybody. Happy trading. Thanks for joining us. Have yourselves a wonderful Saturday morning. Thanks, everybody. Like I said, if you have any questions, shoot me an email, and we'll be happy to help. Thanks, guys. Take care, everybody.